Good morning. Welcome to Stock Market Today. It is Tuesday, December 15th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show, give you daily stock ideas to consider. Hit your inbox every trading day before the market opens. U.S. equities were mixed in Monday's trading, with the S&P 500 ending off its morning highs and growth outperforming value despite renewed stimulus hopes and continued vaccine optimism. Treasuries were mixed with some bear steepening earlier in the day. Dollar lagged the euro, but was little changed on the yen cross. Gold finished down 60 basis points. Crude oil was up 90 basis points after finishing higher for a fifth straight week last week. So we get to the desk this morning, a little bit of a rebound for the S&P, up 60 bips after Asian markets were mostly lower overnight. European markets are mostly higher as well. Treasuries are unchanged to slightly weaker. The dollar is lagging both the yen and euro. Gold up 90 basis points, WTI crude up 20 bips to get us going on Tuesday, where I really wish I had something new to say, but I don't. We had a late fade as vaccine impact wears off. The Qs held up the best. So I guess that was a little bit of a change of pace, where the Qs were your bigger performer yesterday, which is kind of interesting in light of the vaccine news and in light of the stimulus hopes, right? That's normally would argue for the reopening trade, right? Sell tech, buy everything else, or sell the big growth names, buy everything else. But it's not how it played out yesterday. Simple fact of the matter is you want to be having a broad approach, in my opinion, to the market, not limiting yourself. For a while, it made sense to focus on the mega caps and the large caps, especially in the growth area. I think now you can go fishing in a lot of more ponds, if you will, right? Bigger ocean out there for opportunities, and just kind of skirt to the relative strength, skirt to the outperformance at the sector and industry levels, and look for good ideas. There was a while where it was kind of easy to say, just avoid energy, right? Just don't even look at it. It's not the case anymore. That's generally supportive of the market in general. SPY supported 360, then 340. You know what I think there. Above 340, we're going probably, I'll never say we're going anywhere. We have upside potential to 413. Qs, 260 is key. 280 is important in the near term. I think as long as we're hanging out above kind of the 280 mark, you have to be thinking about 340 on the Qs. IWM support near 170, then near 160. Really nothing's changed. And I don't expect a ton to change. This is, as I said yesterday, this is the last full week of the year, okay? And, the last 2 weeks, especially with the holidays falling the way they do, I'm thinking are going to be light on volume. Why wouldn't you just take those 2 weeks off? If you're a fund manager and you're up big this year, you're probably not going to be a hero in these final 2.5 weeks of the year and do anything that could potentially jeopardize your gains, right? So I think that the opportunities, while broad, might take a little bit more time to play out, because I don't think anybody's really paying all that close attention at this point in time, just given where we are in the calendar. All right, let's hit our market in a minute. What are we writing about? Qs held up as broader averages give up early gains. We hit that. REITs at a 5-year relative low. And I'm going to show you a 10-year chart of REITs and utilities, and you tell me what it means. Comm services holds the breakout level, and I think that's important because comm services is where a lot of the fan mag stocks live, right? Everybody thinks that this is a tech thing, right? But Facebook, for market characteristic purposes, for the sector purposes, Facebook's not a tech stock. Amazon, not a tech stock. Google, not a tech stock. Netflix, not a tech stock. As a matter of fact, in the fan mag, the only two tech stocks are Apple and Microsoft. One's hardware, one's software. So comm services is really where a lot of the big growthier names live, the market leaders. So the fact that they're holding up is kind of interesting. Med devices is a source of funds. I'm asking the question because the fund looks okay, but relative strength, not the greatest. Futures point to a higher open today, as I said. Let's hit our major indices from a power bar perspective. Actually, the Dow gives up 5 to 2 here, bulls to bears, after losing 0.5%. S&P down 40 basis points, 124.54. NAS up, small caps up. It's an interesting dynamic. You don't usually see that, right? It's Bain one or the other. NAS up 73 basis points, 18 to 10. Small caps, I mean, just a monster ratio, 813 to 136 after adding 25. Bonds down ticked, sending yields higher. According to the Chaikin Power Bar, small cap stocks, large cap stocks are bullish. Let's do something here now. As I said, it's broad, right? So I don't think it makes sense to just avoid a group. Small caps have been strong, but large caps still make sense. So what I did was I looked at the sector ETFs. It's Tuesday. I do sector work on Tuesday. I looked at the sector ETFs and I said, which sectors are outperforming SPY over the past 6 months? And use that as a starting universe, right? And we can see them here. Materials, comms, fins, industrials, tech, and discretionary. Those 6 groups over the past 6 months have outperformed the S&P 500. And I just simply said, give me the ones that are above their rising long-term trend line with strong money flow and a 3-month high in relative strength persistency. Right? Just kind of leaders that are in uptrends, that are under accumulation. And I said, my thought here is, you might get some opportunities into the end of the year, but you just kind of want to be mindful of what's going on. But, it's a little frothy in the market. And if that froth introduces some sort of pullback above support, we want a list of names to buy. So here are 34 that I think make a ton of sense. And you'll see some names on here you should recognize. Mosaic, been part of the ag theme for me along with Corteva. I mean, Broadcom, one of the highest quality semiconductor names out there. GM, making the turn maybe, I don't know. Freeport-McMoran, part of the inflation trade. SIVB, kind of a chicken tech way with financials exposure to play the valley. Kind of interesting. Synopsys, a lot of names on here take a look at it, screenshot it, watch the show, come back to the recording. But I think that this is an interesting list of names. It's fairly diverse, right? Take Two, Textron, right? We kind of hits all the themes you need into it as a name our clients will recognize. So just a good screen to build a list off of. And so take a shot of this one. And thanks for all the feedback on people who like these screens. Let's hit our sector tracker now, moving to the last 5 days. Energy, the only thing green, just barely so. Staples, discretion, healthcare, round out top 4. Comms, industrials, tech, middle of the road. Utes, materials, fins, and REITs at the bottom of the list. I don't have a ton to say here. I've said all there is to say, folks. I think it's just simple back and forth here. Hard to make too much of anything that's going on in the market over the next 3 weeks. I guess we do have some excitement at the end of this week, beginning of next week, with Tesla being added to the S&P. You've seen what Tesla's done. I get a lot of questions like, how's Tesla going to react? Should I buy Tesla for inclusion in the S&P? And I'm just kind of like, well, I feel like you kind of missed that boat, right? Markets are discounting mechanisms. There's not a soul on the planet who doesn't know Tesla's going into the S&P and that the index funds have to buy it. Maybe it works, maybe it doesn't. I don't know. I'm personally long Tesla, not because it's being added to the S&P. So I'm happy to go along for that ride, but I don't have a clear read and I don't do index ARB. So I just kind of back away from that question. Industry focus, oil and gas, E&P. Yesterday we did services, today E&P, and E&P is the less compelling of the two, I would say. 4 to 5 bulls to bears, lagging by 10% over the past 6 months. It's ranked 19 of 21 subsectors, down 4 slots. Cabot has a very bearish rating. Green Plains, very bearish, and EQT, very bearish, right? So the juice, in my opinion, right now is in services. You want to drill down, though, because energy is making the turn, or at least it appears to. Well, it's made the turn. The question is, does it stick, right? And we don't know the answer, which is why risk management is a major part of your process, right? But remember, in the services kind of on the verge of, or just about clearing these June highs, right? Had a bullish rating. This is E&P is neutral. Trend is strong. Mixed bag. Outperforming, but not through yet. Now, I think it's interesting. I think you want to pay attention, but I know me personally, I've been paying more attention for Chaikin clients to the services side of the coin rather than E&P, or at least the fully integrated big guys. So I think you got to do work if you want energy. You got to do work if you want to invest well. I think too many people think this is easy, and it's not. Let's hit our movers and shakers now. Alexion is being bought by AstraZeneca, stock higher by 30%. INSEE, no real news, along with Rollins, same thing. Regeneron filed a lawsuit. I guess investors like what biotech was hot yesterday, and maybe this AstraZeneca Alexion deal was part of it. But the group was on fire yesterday. For those of you who remember, last Tuesday in my note, we highlighted biotechs is on the verge of a breakout. We looked at XBI. So kudos to those of you who connected the dots on that and got involved with some biotech exposure. Netflix, no real news there. Obviously, though, Disney's commentary just telling you what the demand appetite is for quality streaming content. Loser side of the board, I think you could see a theme in profit taking across the energy space. They have been strong, right? Little pullback. I think that's going to start to present an opportunity at some time. Additionally, Oxy was upgraded at Wells Fargo today. FANG and HFC, Diamondback and Holly Frontier, both upgraded at Morgan Stanley back on the 11th of December. MPC, PWR not really part of this group, but MPC down 5%, PWR down 5%. Nothing company specific driving the trading in those names that I could say. Here's the 10-year chart. 10-year chart of REITs and UTs relative to the SPY, right? So top panel, real estate relative to SPY. Bottom panel, XLU relative to SPY. And this chart goes back 10 years. So there's your defensive groups, folks. There are your defensive groups. Maybe they turn, I don't know. But not seeing signs of it yet. But if they did, you'd probably want to own some, right? Or you'd kind of want to tilt. What's interesting to me is for those of you who don't think we were kind of in a bear market environment from 2018 through 2020, look at how these groups performed, right? Here's utilities, here's REITs, outperforming. Folks, we were in a bear market. Right? If you look away from the Qs and SPY, because of how heavily influenced SPY is by those top 5 names, we were in a bear market. I know there's a lot of froth out there now, and people are comparing this to 1999. I hate analogs. They're not my thing. They make no sense to me. The trend now is the trend now. We live in now. But to the people who say, oh, this is just like 1999, right? They look at things like Airbnb and DoorDash and some of the SPAC activity. And I say, okay, that's fine. I said, but in 1997, people were calling the NASDAQ a bubble, and it probably was, but it was still inflating. So it inflated for another 3 years. So while everybody thinks this is 1999 again, my pushback is, what if it's only 1997? So my view. I'm of the view that we're in the early stages of a cyclical bull, right? Secular cyclical, right? We were in a secular bear from 2000 to 2013 with cyclical bulls and bears in between. And now I think we're in a secular bull market. Within that secular bull market, there are cyclical bulls and bears. And I think we're at the start of a cyclical bull, whereas 18 to 20 was a cyclical bear. Check out the comms holding top side here relative to SPY above the 200-day with a potential shift going on in the RSI. Why is this important? Because again, this is where some of those monsters live, right? Facebook's in here. Google is in here. The gaming companies are in here. Netflix is in here. What's not in here is Apple and Microsoft, right? But remember, the fan mag is not really tech. And then finally, med devices as a source of funds. And really, it's a relative play. I'm looking at the relative and seeing the breakdown. I'm looking at the RSI fading here. The actual absolute chart is okay, but it's underperforming, meaning there are better opportunities out there. I think it makes sense to think about it this way. Take us for a test drive. I'm with you tomorrow. Have a great Tuesday, folks.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.